On March 22, the Reserve Bank of India didn't buy silver. It reserved 327 bars, locked them in, verified, certified, and withdrawn, before the LBMA silver code even existed. That wasn't preparation, it was proof. The old silver price model isn't just failing, it's already fractured. Look at the numbers, no theory, no interpretation. COMEX open interest has collapsed 41% since January 2025. Not slowly, not gradually, it fell off a cliff. And this isn't weak demand. Gold's open interest stayed flat. Oil futures rose. Copper surged. Only silver's paper market bled out. Why? Because institutional players aren't selling silver. They're abandoning it. Abandoning the illusion that a paper contract guarantees physical delivery. Meanwhile, just 100 miles away in London, the physical market is screaming. LBMA physical premiums have spiked 220% since October 2025. Bloomberg didn't call it tightness. They called it panic in London. That wasn't editorial flair. It was an inventory crisis in real time. Vaults emptied, refiners backlogged, delivery windows stretched to 11 days. So ask yourself, if demand is surging and central banks are moving now, why is paper liquidity vanishing? Because paper silver can't settle sovereign demand. It can't pass gate 1 of the new code. It can't verify chain of custody. It can't produce a digital twin. It can't clear forensic assay. So traders walked, not because silver is unattractive, but because the LBMA silver price, the so-called benchmark, is now running on empty. It's a volume-weighted electronic auction. No volume, no auction, no physical supply, no price discovery. It's not malfunctioning. It's orphaned. The system assumed fungible, instantly deliverable silver. But sovereigns don't trade. They reserve, they allocate, they preempt. And they're doing it before April 15, not after. So the price you see on your screen? It's not telling you what silver is worth. It's telling you how deep the queue is. How many buyers are waiting behind the RBI? How many vaults have already been locked? How many bars are gone before the rules even begin? The benchmark isn't broken. The model is. Chapter 1 ended with a warning. The price you see isn't value. It's queue depth. Now, meet the people who built the queue. Not investors, not hedge funds, sovereigns. And they didn't wait for April 15. They started on March 12. That's when the Bank of England published its financial stability report and buried a bombshell in Annex 4.2. It didn't just mention silver. It formally licensed silver as Tier 2 settlement under USD liquidity freeze. Translation: if dollar transfers seize up, central banks can pay each other in certified silver bars. That's not theoretical. That's operational stress testing of a standard that didn't exist yet. Why would they do that? Because they weren't waiting for the LBMA silver code. They were activating it. Then, on March 22, the Reserve Bank of India and Turkey's central bank executed the first $1.20 billion sovereign settlement using the code's framework. Before it was official, they moved 327 certified bars and cleared full verification in 107 minutes. That's not symbolic. That's surgical. The LBMA silver code guarantees sub-2-hour clearance if you pass all 4 gates. RBI and Turkey didn't just meet the standard. They proved it worked months early. This wasn't preparation, it was reservation. And they weren't alone. The LBMA's own Q2 2025 report confirmed unprecedented sovereign inquiry into certification pathways. Let that sink in. They weren't asking if the code was viable. They were asking how fast they could lock in supply. How many bars could be pre-allocated? How deep their queue position could go before anyone else even filed. That's not participation. That's preemption. So what does sovereign front-running actually look like? It looks like the BO modeling silver as emergency settlement before the rule exists. It looks like RBI and Turkey clearing $1.20 billion in physical silver before the code launches. It looks like the LBMA verification queue hitting 11.2 days by April 1, not April 16. This isn't speculation, it's documented behavior. Sovereigns aren't adopting the LBMA silver code. They're converting it into a reservation calendar. A real-time allocation system, where price isn't discovered, it's assigned, based on who cleared gate 1 first, who passed forensic purity before others even submitted, Who owns the digital twin before the vault door opens? The code wasn't launched on April 15. It was activated on March 12. And the queue? It's not forming. It's being reserved, in advance, in bulk, and under sovereign authority. Here's the fatal flaw no one warned you about. The LBMA silver price was built for traders, not sovereigns. Its electronic auction assumes silver is fungible, swappable, instant, interchangeable. But sovereigns don't bid, they reserve, they verify, they pre-allocate. And the April 15 code didn't fix that mismatch. It codified it into 4 mandatory, sequential gates. Gate 1. Forensic purity. Each bar must be scanned at atomic resolution. No trace impurities, no alloy drift, no variance beyond 0.0001%. Not good enough, not industry standard. Forensic. Gate 2. Unbroken chain of custody. Every hand that touched that bar, from refinery vault to London vault, must be digitally logged, time-stamped, and cryptographically signed. No gaps, no exceptions. One missing signature? Gate 2 fails. Entire bar rejected. Gate 3. Digital twin. A live, immutable blockchain record, not just ownership, but identity. This exact bar, this exact weight, this exact assay, this exact location. If the twin goes offline for 12 seconds, Gate 3 stalls. Gate 4. LBMA assay. Not a spot check, not a sample, a full re-assay by LBMA certified labs only. And those labs are booked 11.2 days out. Let that sink in. You can't skip Gate 3. You can't batch process Gate 2. You can't rush Gate 1. And you cannot auction what hasn't passed all 4. So what happens to the LBMA silver price? The so-called benchmark, when 99.99% of the silver in the system hasn't even entered Gate 1. It stops reflecting value. It starts reflecting Q depth. Analysts keep citing 300 paper claims per 1 ounce of eligible silver. But that number is meaningless now. Because eligible isn't about volume. It's about certification status. And right now, less than 0.01% of silver bars in London meet Gate 1. That's not scarcity. That's eligibility collapse. The LBMA's own Q2 2025 report confirms it. Sovereigns aren't debating whether to use the code. They're racing to clear gates, before others even submit. Why? Because Gate 1 isn't a checkpoint. It's a choke point. And whoever clears it first doesn't just get silver. They get priority, across all 4 gates. Which means the LBMA silver price isn't setting value anymore. It's lagging behind allocation. It's not telling you what silver is worth. It's telling you how many sovereigns are already inside Gate 1. How many bars have been pulled offline. How many vaults are empty, not because demand is high, but because certification is slow. So the next time you see silver's price spike, don't ask, why so high? Ask, who just cleared Gate 1? Because the price isn't a signal anymore. It's a timestamp. Here's what you're seeing on your screen right now. Not silver's price. 2 prices, operating in parallel universes. One on COMEX futures, flatlining, low volatility, barely reacting to Fed rate cuts. The other in London vaults, spiking, parabolic, surging every time a central bank clears Gate 1. That's not a glitch. It's the dual price world revealing itself. And it's already live. Watch what happens this quarter. When the Fed cuts rates in Q2 2026, its 3rd cut this year. Watch silver's COMEX price stall. Not crash, not surge, stall, because paper markets can't absorb sovereign demand. They don't bid, they allocate, they don't trade, they reserve. So while traders wait for signals, vaults are being cleared. And LBMA physical premiums? They'll spike again. Not because silver is expensive, but because the queue just got deeper. That's why the LBMA's January 2026 analyst survey, citing targets well above $100, isn't forecasting price. It's estimating queue depth, how much premium sovereigns will pay to jump ahead, how many bars remain unallocated, how many verification slots are left before the next 11.2-day backlog hits. This isn't a squeeze, it's a system handover, like gold in 1971, when price discovery migrated from New York trading floors to Fort Knox vaults. Like oil in 1973, when the spot price stopped reflecting supply and started reflecting who held the pipeline. Silver's price discovery has just moved From screens to vaults. From algorithms to allocation committees. And that migration isn't temporary. It's irreversible. Because the LBMA Silver code didn't fix the model. It replaced it with a reservation system disguised as a benchmark. So the next time silver hits $100, don't ask, why so high? Ask, who just cleared the vault? Because the price isn't telling you value anymore. It's telling you who's first in line.